Yo, what's good YouTube? It's your boy Jello. Welcome back to my channel. Welcome back to another YouTube video. Today what we're about to be covering is imbalances and how I incorporate in my own trading plan, my own trading strategy. So let's get right into it. So what we have here is a bearish trend. We've got wicks coming up here. We've got wicks coming down here. Same thing. Wick, and then another wick right here. I know it's a little sloppy, but what do we see? We see a gap from this wick, we'll say, until this candle. So basically what this means right here is that price needs to come back up at some point to retest this level of imbalance. This entire gap right here where there was no wick coming down, no wick coming up to touch each other. So if price was like this, there would be no imbalance because I already filled it, because there was a wick coming down here and then the wick came up here to fill all the orders and the gap in the market, which price left because it pushed down too quickly. So why we look for imbalances and gaps in the market is to give us a little sense of direction of where price needs to go next. So say price is coming down, and then it drops like this. This is our supply zone, and then there will most definitely be an imbalance right here, sitting right below supply zone. We literally wait for price to come back up to test into this imbalance zone and the supply zone to fill in all the orders, the gap that all the banks, the sharks missed selling down because price pushed down so quickly. Price taps back into it and then it falls, come back down to right here. So this is how I incorporate gaps in the market, imbalances. You can also look for imbalances to see on the higher time frame price needs to go. So I'll show you on an actual chart right now. We'll go to NASDAQ because Friday we did have pretty good setup and it did leave a gap in the market, left an imbalance. So I'll show you right now. This was around 12 p.m. Eastern time. So let's go back, delete this. Okay, so what did we see? We had our fib level. We don't have to worry about that. I'll go over that in another video. What do we have? We have a supply right here because this was the last up candle before that big pulse down, which took out this low. So we had this break structure right here, and price pushed down so quickly that it left the gap in the market and imbalance. So you can see you take it from this wick and then take it from the other candle. This got touched, so we'll just put the imbalance right here because this was the true gap. Because I mean this gap kind of got touched by this wick, but this also left liquidity. So instead we'll just mark this up. Buy side liquidity is literally just liquidity. I just use different terms for it. Buy side liquidity, downside liquidity, sell side liquidity. We'll go over that in another video. Like I said, we don't have to worry about that right now. Right now our main primary focus is imbalance. So price pushed down, right? We had a little structure, a minor structure form, but our main area we were looking at was up here at the supply zone. We had more confluences. I'm not going to go over that right now, but price taps in, it completely fills in this entire gap right here. Why? Because there's no wick on this side, no wick on this side touching. So say price had a wick down there and had a wick coming up here, this wouldn't have been an imbalance. So we wouldn't have looked at this saying, oh look, price needs to come back up here. price did need to come back up to take out this right here, this liquidity, but we also had a second confluence, which was this imbalance. So as you can see, big entire gap, no wick on the left side or candle, no wick on the right side or candle. This entire candle didn't have anything around it. It was just candle, right? So price pushed back up. It cleared this entire imbalance. So we'll mark this up. IPA is imbalance. That's just the way I mark it. IPA cleared. So the imbalance was filled. So now what we look for our 50%. You could enter off the 0%, the open of the order block or the supply zone, but I mean, if you enter off the 50%, you'll get a better RR. That's what I really look for. So price tapped into the 50% right after touching the imbalance, wicked back up, retouched 50%, and then boom, price came back down, took out this low, this liquidity. And yeah, that's really it. So same thing would have happened if we were on the buy side. I can't flip this because my recording thing is right in this corner. But let's see. So now for the buy side, imbalance, demand zone, imbalance. If you want to see, mark this demand zone up. But we also had this imbalance right here. We had this wick, which got filled, and we had this wick. They didn't meet, so there's gap right here in this candle. So we're targeting this area because it wasn't fulfilled. Price pushed up too quick. Price needs to come back down to fill in this zone to continue the push up. So if we want to mark up our demand zone, do this. We will also mark up this one as our imbalance. So do the imbalance. So now we wait. Boom, price has 50%. Now what do we want to see? Price come to the upside, take out these highs, take out this liquidity. What does price do? Takes it out. That's our TP. And then if you want to hold it, you can, because why? There's imbalance here at this level. There's imbalance here at this level. So you could have took it to either one. I'll have taken it to this one because this was the full imbalance. I had to clear up all of this. This was a huge gap. Price left the day before, must have been news or something. Price just pushed down way too quick. Price had to retrace back up to this area to fill more orders and stop other people out. That's basically it. That's imbalance. That's how I use imbalance. This was a quick video. Imbalance once again, or IPA. Imbalance or IPA, gaps in the market that need to be filled. Use this to your own advantage. Use this for take profits. Use this for more confluence in your trade. Use this to see where you want price to go. That's really it. Hope you guys and girls enjoyed this video. Like, subscribe, comment, let me know what you think. Hit me in the DMs if you got any questions. Study this, backtest it, take notes. Stick to risk management, that's all I'm gonna say. I'm out. Peace.